right, so hello and welcome to our guest segment on the Breakfast Connect show, where we host conversations that help entrepreneurs and professionals to succeed. And on our show today, I'll be talking with Gary Palmer. He is the CEO at Paragon Lending Solutions, which he founded in 2019, and he has grown into a successful provider of finance to established entrepreneurs. He's also a chartered accountant by training and has a comprehensive understanding of the financial levers for business growth. Hello, Gary. Welcome to the show.
Thank you. Thanks for having me.
All right. So our conversation today focuses on the real estate industry, basically the tolerance in the real estate market, the importance of timing, as well as bargaining. And now, just to set the stage now, Gary, do you consider real estate to be a good investment in 2021? A lot of times I would hear investment advisors talking about how, it's the perfect investment to jump in. But in 2021, do you think that is still the case?
So it's a good question. I mean, one must have a look at what are you comparing it with. So you look at all the different asset classes. Do you compare it with cash? Do you compare it with listed equities? Property, and then you have to look at property and say, okay, what part of property do I want to play in? So there are many, many subsectors of property. So what we've seen is, especially with COVID, that some property areas have done exceptionally well. So if you look at industrial property, with the rise of e-commerce, you would have seen a lot of industrial property do nicely. But then when you look at residential property, again, you got to take residential and say, which part of the residential place do I want to invest? So if it's, for example, in property in South Africa, under, call it 1.5 million to 2 million rand, due to reduced interest rates at the lowest we've seen in years, that side of the property market is flying. But the more luxury residential property is really struggling. Also, another aspect which maybe 3 years ago was the flavor of more than a month, flavor of the year was blocks of flats. You were getting great yields on blocks of flats. So people were developing blocks of flats and renting them out. And that was fantastic until this year. What have we seen? We've seen interest rates drop, and the tenants that couldn't afford to pay or not paying because of COVID, and those that were doing well decided, well, interest rates are low, so let me go and buy my own property. So it depends which area. There definitely been some great investment opportunities in property, like the industrial space. The office market has really taken a bad smack. It's probably been the worst performing side of the market, and certain pockets of residential. So I think from an investment perspective, I would really drill down into the different areas. Petrol stations is one example. That has done, even though there were, with COVID, fewer people on the road, but that still seems to be very resilient, a resilient asset. So we've seen a lot of people focusing on that area. So for an astute investor, it's time to do research. Don't just, if you see an asset that appears to be cheap, don't just jump in and buy it. There's got to be a reason for it, and one needs to do one's homework.
True. But a focus now, of course, on real estate. Like other asset classes, there's always the conversation around timing. When should I jump in? When should I get out? So for real estate now, what is the importance of timing as well as bargaining in this sector?
Okay, so timing in most investments is critical. People think, in property especially, you make most money when you buy a property than when you sell. So, the time it takes to make sure you're doing the right deal. If you start off doing the wrong deal, then no matter what your timing is trying to sell it, you're going to be in trouble. So one needs to move quickly and ensure that you've got the ability and capability to transact. In other words, mainly that's got to do with some equity that you need to put down and the gearing. So, if you see an asset, I would, for your listeners, I would really do the homework and try to ensure that you've got the capital available to move on a transaction sort of upfront. I've seen so many times where a person has gone to look for a property, bought a property, it's fantastic, but then forgot, hold on, now I'm looking for the money after the fact. So that is really important. And ensure that if you do decide to sell a property, and you're going to see this more now resulting from COVID, is that you selling because you want to sell and not because your financier is pushing you to sell. So you might have bought well, but if for example you've got your gearing wrong, or, for example, your tenant's not paying and you haven't got a alternative plan, the worst thing you can do in property is be forced to sell an asset when you don't want to sell it. And we're seeing that it's going to start coming now even more, where the banks are starting to put pressure on clients, where they're almost forcing you to sell an asset at a price that you know is not reasonable, but it's just to settle their debt. So the critical thing about property is a few things. One of them is buying correctly at the right price, and don't think you've got to move quickly. Rather go slowly and make sure that all the fundamentals are correct in terms of your tenant and your due diligence, etc. And make sure that you've got the correct gearing levels. Don't necessarily overgear. The only time you want to overgear or borrow relatively expensive funding is if you've got the exit is absolutely clear. If the exit's not clear, taking expensive debt or overgearing is not a solution, because one hiccup, interest rates go up, or your tenant, something happens to your tenant, I promise you the banks are going to move on you. So you need to ensure that the gearing levels are correct.
Right. Now, still asking from my very honest ignorance now. I mean, I have a lot of my friends jumping in this space right now, and they're giving me 1,001 reasons why I should, but I still have so many questions to ask. Now, you talked about, I think you talked about pricing just a few minutes ago, like the perfect price or knowing what price to give out your property and all. But how do you go about the process of choosing the right selling price? How do you go about advertising or marketing the property to buyers? And of course, negotiating with the buyers and eventually getting them to buy.
Yeah, so I mean, a few things. One is you've got to differentiate in property. Again, it's such a broad area. How do you value a petrol station? How do you value a piece of vacant land? How do you value commercial versus valuing residential? So again, I mean, and just to my previous point, the property sector is probably divided into 20 different subsectors. So each of them have got their own. So that's why you get specialists. You get some specialists that focus only on residential and just stay away from all other asset classes. Some are heavy into that, decide, okay, we want to get involved in retail, but in the outlying areas, so everyone is specific. So I would caution your listeners just to say, it's a spray and pray approach. I'm in property, but in the meantime, you look at their portfolio, there's no focus. And we've also seen balance sheets with clients that are involved in residential, some luxury, some commercial, and it's all over the place. And they are so different, these subsects from one another. If you're trying to work out valuations on properties, if it's normally buy property for income, unless it's your primary residence or you want to buy to flip. If it's on income, then you've got to look at the quality of the tenant. You've got to look at what are the cap rates are trading at, the cap rates are at the moment. And just make sure that you look at the expenses. And again, I'm coming down to, I'm talking about non-residential now. Now I'm speaking about commercial and office. That the expenses are critical. Your income is often that's contracted, so you've got a lease. So that's relatively easy to understand. But now you're going to own this property and you've got these expenses. So, we saw certainly in South Africa, we saw rates and taxes go through the roof. Expenses as a percentage of income was used to be around like 20-25%. We went through a period where, water prices went up, rates and taxes went through the roof. And then now suddenly your expense ratio has gone up from 25% to 33%. So that just devalues the property immediately. So that's why doing a detailed analysis in the commercial space of your income, that's just around your tenant, but mainly on expenses. And then you would find out what properties are trading at, what yields. And how do you find that out? You speak to a lot of the brokers. There are a lot of property brokers that, and that's point one, you speak to them, but also you look at the, previous transactions that have occurred, and then also you've got the benefits of looking at the listed market and just seeing, what yields the listed market's trading at. So you do get a feel. It's easier to understand the commercial. When it comes to residential, that's sometimes trickier, but the information is more readily available, is that you can look at previous sales in the area. You just go online and you can see what sales are in the area. And then you can also speak to a lot of estate agents or brokers. But I think the critical part is the value add. What value add are you going to play? If you're going to buy and then just flip and sell, the problem is that the costs of transacting in property, it depends where you are naturally. But in South Africa, it's very expensive. you buy a property and you're flipping, you've got tax implications, even though we don't have stamp duty, there's VAT and other costs, transfer costs, you've got bond costs, you've got legal fees, etc. So normally, when somebody mentioned, you want to buy a property, flip it and buy something else, the transactional cost can be up to 20%. So it's and people don't often factor that in. Is don't look at just the purchase price and then what you can sell for, because when you sell, you've got to take off the 4.5% for agent's commission, and then you've got to take off the VAT, and then you've got so sometimes your profits get whittled away quite quickly. So you do need to understand all of this before investing.
True. There's a lot to learn before jumping into that one. And I'm one of those people that think that, real estate investing is one of the safest asset class to be in. But then it has its downsides. Like in Nigeria, I know you've been operating in the South African space for quite a while, and I don't know if you've been in the Nigerian space, but here, we've seen people go into legal battle over properties that they have bought. I know of a family who bought 2 plots of land in an estate, only for another set to sell that land and its environs to a company who was looking for a residential place for their workers. And as I speak with you, that case is still in court. So what specific things do you look for in an investment property? How do you determine the difference between a good deal and a bad deal? Because things like what I just mentioned tarnishes the image of real estate companies. How do you make sure you don't fall into this trap?
Yeah, from a listener's perspective, the safest asset class naturally is cash. Property is not necessarily the safest asset. Yes, it's bricks and mortar, and then for whatever reason in Africa, we love bricks and mortar, certainly South Africa. There's a definite affinity to it. When you look at the equity market, a lot of people don't really understand that market. Okay. And that's why a lot of people, find it difficult to operate in that market. So they say, well, hold on, I can drive past it, I can feel it, etc. So you want us to look at the risks, of this type of asset class and what can happen. The risks are, yes, the legal, what you're buying is what you think you're buying, but actually in many cases it's not zoned for what, the reasons that you thought, or the seller has failed to disclose material aspects of that property, and then you're going to go legal. That's why it's probably quite important to get a reputable a broker in between, and then also to do as much of a comprehensive due diligence as you can before you buy it, and get the advice of professionals, and also have warranties in place. And those are where the seller warrants that certain things are as you see them in that particular transaction. Again, a lot of the risks in certainly in South Africa is that, if you are going to get borrowing on that asset, we often have to sign guarantees or personal sureties. So if something does go wrong, like really wrong, not only are you going to lose your equity, but the financier can come after you in your personal capacity, even after the asset has been sold, if there's a loss from a bank. So that is a real risk. And then the others are just operational risks, right, whereby if you're buying a property to rent out, to earn an income, it's got to do with your tenants. And big risks are legal risks. So, for example, if you're in a residential, what we have certainly seen here is that it's a very, very borrower-friendly society in South Africa, as well as tenant-friendly. So, your tenant doesn't pay you, assuming it's a residential property. There's the PI Act and etc. A lot of acts whereby you can't evict your tenant so quickly. So a tenant decides not to pay, they can, they constitutionally can sort of oppose the eviction. And you could have a non-paying tenant staying in your property for a long period of time. And I promise you, the bank and the financier are not interested in offering you payment holidays or anything like that while you've got a defaulting tenant. So a lot of due diligence must go into, and a lot of credit checks. So if you are going to own a property to rent out, you have to do real due diligence on your tenant. That's credit checks, that's references, that's reviewing bank statements, etc. Same as on commercial. You also need to do a lot of due diligence. So people say, I bought a property, I'm going to rent it out. Well, if you rent it out to the wrong tenant, in residential, you are in real trouble. And same as commercial. So there are a lot of factors that you have to take into account. So we do have a love and an affinity for property. But I've been in property lending. You mentioned earlier 2019. I actually started Paragon in 2011. but I joined in a bank in 2002. So I've been in lending for a long time, mainly property backed, and I've seen lots of issues where people thought this is a really safe and easy asset to understand. It's not. It's not at all.
All right, I'll just let you go in a few minutes now. But just before that, I mean, I don't know how it works in South Africa, but in Nigeria, especially in recent times, we've seen real estate agencies branch into installmental payments for clients. It wasn't like this before now. How has that worked, or how does it work in South Africa? Is it the same thing?
Yeah, so it's very new. The banks don't really operate like that. Normally you think of installment sales, you think of motor vehicles, you think of some equipment. There are a few companies that are involved now in property and installment sales. And those, it's mainly you do that because there are a couple of advantages of that, but it's mainly the people that can't get funding from their traditional banks. Getting funding from your traditional bank is probably the best. It's the cheapest. It's over the long term. So that definitely is the easiest way. Normally, however, for whatever reason, you can't get funding from your bank. Maybe your credit rating isn't great. Maybe you are over a certain age. For example, in South Africa, if you're over 60, it's very difficult to get a home loan. So normally you can go via the installment sale option. There are also new products now, for example, where people, normally the older generation, have got lots of equity in their primary residence, but they don't have any income. So now there's a new product, it's called Home Equity Release. It's been around for a really long time, where now you're getting the older generation can access the equity in their house. So there's a lot of clever, structures in the market outside of the banks. But I think the primary source, especially in residential, and certainly in commercial, if you get it right, to finance it through the banks. On the commercial side, also there's, we can get deep into it, but there's different levels of gearing, borrowings. Mezzanine funding is quite a big thing as well. But that's how you fund a lot of commercial transactions if you don't have a lot of equity to put down. But definitely the installment sale is especially in this market, where people's credit ratings have deteriorated, is going to be it's going to become much bigger.
All right, now just before I let you go, I know I've said this already before. Now,
I don't mind.
Talk to us about Paragon. You guys help clients get the right financial structures in place in the quickest and most effective way, of course, to optimize their financial affairs for wealth creation. How can businesses jump on this one? And is this just a South African thing?
Yes, at the moment we only focused in South Africa, and we do get calls from people north of our borders investing in South Africa. Our focus is debt. We don't really look at equity. Okay. Given our wealth of experience, we actually backed by one of the banks. So a lot of clients need a quick turnaround time. The bank's turnaround time has also deteriorated. So our turnaround time is 36 hours for a credit decision. Okay. And we've also got, as I mentioned, our own funding lines that we can fund businesses very, very quickly. Because normally they have a requirement now, and maybe the need is relatively short term. And sometimes not, the banks have now got a laundry list of information that you have to give them. We take a more of a client view where we can make a call on certain decisions. And that's why we can move quickly. So we fund ourselves, but often we have clients who not in need of our funding. Maybe they're requiring much bigger funding. Maybe it's over a longer term. So we've developed a debt advisory business. We don't like to say no to clients. That's the most important point. If a client has got a transaction, we want to meet the client's expectation. If we can fund it, that's fantastic. If we can't fund it for whatever reason, we deal with about 117 lenders in South Africa. So we will definitely know how to structure it and place the funding to third parties.
Great work you're doing, Gary. Thank you so much for making yourself available for this conversation.
No, my pleasure. Anytime.
Have a nice day.
Thanks. Cheers. Bye-bye.
And that was Gary Palmer. He is the CEO at Paragon Lending Solutions, which he founded in 2009, and he has grown into a successful provider of finance to established entrepreneurs. And yes, it's a wrap on a guest segment on the show this morning. We'll be right back with more. Stay here.